Good morning. It's Thursday, and that means it's Traders Workshop. Today, Jason and I, mainly Jason, are going to talk about Vanna Inertia. Sounds scientific. We're going to break it down. Hopefully, we make it easy on the opening bell. Oh, no music today. Hi, young Jason. How are you?
Hey, old Lex. How are you?
I'm old Lex. That's right. I could still run like a madman, though. Anyway, no Mark today. Mark is on holiday, right?
Mhm.
So he's who knows what he's doing. He's probably in France or something. And we're going to talk. Yeah, go ahead. Right?
I said he's at the beach.
He's at the beach. Correct.
Mhm.
Vanna Inertia. First of all, I think you made this up. I mean,
I did.
really, you made this up.
Yes, we did.
Okay. Just so we're clear, it's not a technical options term. Vanna is for sure. The inertia part, I don't think so.
Inertia is basically, I mean, I don't want to sound too complex, but it's basically applying physics calculation to the Vanna environment that we have for dealers. So that's it. But essentially, if I'm going to define it, I'll define it for you.
Mhm.
It's the bullish or bearish inequality from outside capital. So if Lex takes $10 million and buys the underlying, and then $10 million and sells the underlying, it's the inequality of how far the price would go. So there'd be more liquidity either going up or down. Does that make sense?
Sort of. So, and you measure this, right?
Yes, we measure it based on what the dealers would be doing if a certain amount of capital were to be applied.
Okay, so why do you choose? First of all, let's just go back. Pretend like people don't know what Vanna is. What is Vanna?
Okay.
Let's start there. First of all.
So Vanna is a cross derivative between Vega and the underlying, or delta and implied volatility. So basically, it's every point move in implied volatility will move deltas in an option position or in an option valuation by a certain amount, and that's Vanna. Okay. It could also be the relationship of Vega when the underlying moves, its impact on Vega.
Okay, so let's go with the first definition first. That's probably a little bit easier to understand.
Yes.
So I think we typically sort of look at Vanna on out of the money options. Typically, I mean, not always, but typically, right?
Yes.
Because it tells a story. And for the folks, so if we raise implied volatility in an underlying asset, it doesn't matter what it is, X, Y, Z. Okay. The out of the money options do what with their delta? They tend toward 50. The higher volatility goes, the more coin flip we get of those finishing in the money or having a chance to finish in the money. Is that somewhat safe to say?
In an absolute way, yes. Because I mean, if it's a put, then it's negative 50. But yeah,
that's right. The puts are negative, calls are positive. But what happens there, what's instructive, is that as implied volatility rises and those out of the money options rise in delta. Now in puts, they're going more negative. Dealers have to do something a little bit different because their deltas are getting out of whack, right? So that's why you tend to look at this Vanna so closely. Now, why don't we have? I'm just going to make this up. Why don't we have charm inertia? Because charm is delta decay, right?
Yes.
Okay.
So the reason why is because, first of all, what we're trying to measure with this is the reaction to a customer activity. We are not measuring the dealer activity because that's Vanna itself. That's the whole point of Vanna itself. Okay. What we're trying to do is, if the customers were to push in one direction or the other, then what would be the inequality of the dealer's response? Okay. So why don't we have charm? Because when customers are charm is the relationship between time and deltas. There is nothing there on the underlying. So if if customers start pushing, if they start selling a lot of underlying, or they start pushing the stock down or up, charm is not as impacted. It's only impacted by the by the proximity to the price change.
Okay, that's fair. All right, so you had another definition of Vanna. I'm going back to Vanna now. I always understood it to be the change in delta based on a 1% change in implied volatility. What is that? Deltas. You had another definition or another reference to Vega and Vanna.
Yeah, it could also be the change. Again. It could also be the change in Vega based on a move in the underlying.
Okay, so let's make it simple, right? Let's pretend we have all our Vega at the money. Okay, and the underlying moves far away, up or down, doesn't matter. That Vega now is going to change because it's a way out of the money or a way in the money option, depending on which way the stock goes, right?
That's right.
So Vanna measures that as well?
Yes.
Okay, interesting. Not just changes in volatility, but changes in underlying and what that does to your Vega.
Yes.
Okay, interesting. All right. Let's move along. Sorry, I wanted to clarify a lot of things there. I think
that's good. That's good because we need to lay down the definitions.
Okay, now do you have an example, or you want to go there now?
Yeah, let's go.
Right, let's go to the example, and I might add when we see the example that this seems like the new Volin that I don't have in stuff. Do you have? Are you sharing your screen?
You have it,
or are we?
You have it.
Oh, there it is. Okay. So I don't have this new version. So all you folks out here watching who have the new version, congratulations. Jason didn't give it to me. You think you did, didn't you?
Well, first of all, he has it.
It looks great, by the way.
Thank you. It's actually it's a
awesome
widget model. You can rearrange and you can add widgets. It's pretty cool.
Okay, good. All right. Explique, por favor. Let's go. What do we got here?
So this is our cumulative Vanna curve. Okay. So this is if the market comes down a little bit, dealers Vega is going to change. It's going to come down. 3 billion notional.
Okay.
It'll come down 8 billion notional when it gets down to 5,300. That kind of thing.
Okay.
Their notional Vega will go up here, right? As markets advance. This is kind of showing that we're in that dealer long call kind of area. A lot of customers in SPX sell calls against their underlying position. And, since I guess October, we've gone nonstop up. So we are in that sold call area, right? Does that make sense?
Yes, but just so we're clear, it's not the customer's sold call area, it's the dealer's bought call area. The customers have sold the calls, dealers own these. So it does, and I just want to make clear, it doesn't mean that their P&L is going up because Vega is going up or implied volatility is going up. It means that their Vega number is getting bigger.
Yes, that's right.
So, and that's because of these long out of the money calls. As we move up to these things, they get a bigger number, not necessarily a money maker per se.
Right. That's right. So their exposure to implied volatility is increasing as the market trends up.
All right. I know you're going to get to this, but I'm going to ask anyway. Why is this important? What does it mean to a retail trader who looks at this and says, "Oh, dealers are long all these calls to the upside. What am I supposed to do with that? Is there something they can do with that technically?"
Yeah. Well, first of all, Lex, you tell me as a former market maker, do you like large amounts of positive Vega?
I would say I don't like large amounts of anything except for dollars. Okay. And I like to hedge the living daylights out of most of this stuff. Now, if I have a Vega reason, let's say vol's at all-time lows in a particular entity, I might lean. I'm going to certainly lean on the long side of Vega, but I'm still going to hedge as a market maker. Make sure we understand that. I'm still going to hedge the heck out of my delta curve. My green curve, right? I'm going to always try to hedge it because I get so much money buying bids and selling offers. I don't need to have any sort of play, as it were.
Right. But Vega in particular, you warehouse until a certain point, until
That's right.
Until it gets obnoxious, right?
Yep. Until it gets obnoxious, and then you have to make a decision.
Yes. Right. So, so that's the first thing. And a couple other quick assumptions is this Vanna Inertia is calculated on a plus or minus 5% move. Customers are not like sustaining moves for, 15%. They want to beat the market, not be the market, right?
Right.
And also this is real time based on all expiration Vanna. Okay.
Mm-hmm.
So this is the Vanna Inertia number. And essentially, I mean, what I'll do real quick is kind of, I can't draw on StreamYard, can I?
No, not yet.
All right. It's okay.
We'll probably have.
So essentially, right now, Vega is very high positive, and dealers probably do not want to make it higher, right? That makes it worse. It makes it harder for them to manage higher amounts of Greeks.
Yep.
So this increase right here is kind of bearish. It's going to act as resistance because it's going to show up on their deltas as their secondary deltas. What's it called? Soft deltas. It's going to show up as you're going to have to hedge this, and it's going to be selling pressure. Okay. But then down here, you get a little bit over here of support from puts that are being put on probably today. And then you have a lot more Vega decline, which is kind of helping them. So both of these sides are a little bit bearish, right? Bearish in direction. Okay.
Sure.
Like if customers were to apply bearish pressure, dealers are not going to resist very much, right? But if they put on bullish pressure, dealers are going to resist a little bit here at 5,500 and then a little bit more at 5,600. It'll start getting a little crazy, right? Here at 5,575, right? These are the points in which it'll be more resistant. So what the Vanna Inertia is showing then, if I reduce this, go back to here, is that relative imbalance. So negative 0.25 is saying if the dealers push, if the dealers are bearish, it'll have more of an impact in absolute terms than they were bullish.
So why is it a negative? I don't understand the context of the number. So why is it a negative point? Is that a lot, a little? I have no basis.
Okay, so the bounds of Vanna Inertia go from -1 to 1.
Okay. Well, that's helpful. You should have told me that from the beginning. That's a helpful feature.
Yes. -1 is super bearish. +1 is super bullish.
Now we're getting somewhere.
Yep. If you're sitting, so to make it easy now that we've explained kind of how to calculate this, if we were sitting right here at 55.90 with this huge strike right in front of us, Vanna Inertia would be more negative. But if this were more like a V, right, and this were up a little bit, then Vanna Inertia would probably be more like 0 or like 0.1 or something like that.
Vanna Inertia to the right of this graph, to our right as we're looking at it. So the highest points up there. What is Vanna Inertia up at those higher levels on the right? Yeah, up in there. What would that?
So if it were up here, Vanna Inertia would be a lot more negative because there's these. If it were here, because there's these steep cliffs. This is very high Vega at this point right here, and they're they're going to be looking to incentivize customers to sell. Okay,
got it. Okay, good. So this is a new
feature. Here, Vanna Inertia just went down by a little bit, and that's because we, I guess the market. If I zoom in here, the market, I guess we're just in this little valley. So this little hump right here is giving us a little bit of relief on Vanna Inertia. We have to get over this
little hump there.
Down.
Is that little hump that you're alluding to? Is that a sort of a stickiness place, a little support potentially?
Exactly. Yes.
Okay. Got it. Interesting. Okay. Well, all you brainiac mathematicians are good at this. I'm glad you figured this out. It's like the stoplight analogy.
Right.
I can't figure this out. I just need to know how to use it.
Right. So the only thing, the way that we've been using it, and we're kind of doing studies to kind of show it, is this is kind of the customer side. So you have to have a thesis, like if FOMC is happening today or something, right? That the return to risk based on this is if people see it as a bearish decision or whatever, that the market would go down. But if people see it the same bullish, it will go up, but not as far as it would have gone down if they saw it as bearish.
Okay.
Right. Yep. And if you combine that with aggregate Vanna, then which aggregate Vanna is just kind of showing you how much dealers will be buying or selling. With positive aggregate Vanna, dealers are going to be bullish, not as bullish as they were maybe a couple weeks ago, but they're going to be bullish overall. So you combine that to make a full story. It's like dealers are going to be somewhat bullish, but they're not going to stop customers from selling. They're not going to be supporting anything. So you can kind of make a thesis.
Right. Okay, good. So we're looking at SPX, right?
Yep.
Macro index, massive notional value to all the trading that goes on, trillions, I believe, right?
Yeah, the most.
Okay. How important is Vanna in an index like this? And I've asked you this before. I just want to make sure we're clear on it. How important are these factors in a $1 trillion index versus something like GME, GameStop, that has not nearly the notional? It seems to me that a GameStop situation has much more profoundness to these kind of values than something like a massive SPX index. Is that right or not so right?
So the answer is it depends on the underlying. GME doesn't, as an equity, does not trade nearly as much as notional as the options do. The options notional outweighs the equity notional by a lot in GME.
Okay.
So it has a huge impact on there. SPX, if you count the underlying as ES futures or the whole underlying stock market, its sheer size has an impact, but it is not the level of a GME kind of thing. I would say that it absolutely has an impact on its constituents as well, but the imbalance of its constituents, like you saw NVIDIA, it's like contributed 30% to SPX gains this year or something like that. That went up, and because SPX, because of the structure in SPX, everything else kind of had to take a step back in order to accommodate this NVIDIA, shot up. Okay. And that's kind of why you get the divergence trade, which, we've talked about in a prior episode, where people, will hedge their whole portfolios in SPX with bought puts, sold calls, stuff like that.
Right.
And start stock picking based on whatever thesis that they have.
Okay. So let me ask you another question. Again, let's pretend you're an advisor, which I think you are.
Yep.
And let's say you have this data in front of you. You have all this money to invest, and this is your trade. What do you do with this? And again, this isn't investment advice right now. I'm just asking your opinion of what you would consider thinking about doing with this information. Would you do a massive short call spread? I mean, are there butterflies involved? What are you doing with this information as we see it right here?
So the first thing I do is I try to identify the largest Vanna strikes.
Okay.
Like this, I mean, we're using the cumulative here, but 5,600 is an extremely large strike where, right now it's up at 11 billion. It would add to your Vega, and the total, if I come down here, is only 12 billion. So,
okay.
This is a huge strike. This is when it starts becoming Vanna neutral, right? So
5,600 is a huge strike. And then do we know which part of the expiry that strike has such a big value?
I can down select, but I know it's July.
Okay, it's July, but we can
down select it in the widget, but
I got you. Okay.
Yeah.
So we know this is July, which isn't far away. So it's a month away at the most. Okay.
Yeah.
So now we have this 5,600 strike. What would you do with this?
I mean, so basically I know that it's going to be very difficult to get up there.
Yep.
It will need a catalyst if you want to see downside. So if you want to buy a put, you're going to need a catalyst. But if you want it, I sold a call vertical north of the 5,600 strike. I did about a week ago or two.
Yep.
About 5,620 and 5,660, and I sold a few call verticals, and I have a stop at 50. If we start passing 5,600 pretty strong, then I'm gonna bow out. But as you see, market 5,500 is also a pretty decent resistance. So it's going to take some effort to get it up here. So, and it was also a little bit overpriced, like those, relative to this structure.
Yeah.
Those options were a little bit overpriced. So,
okay. So do you see, so you need a catalyst. Let's make sure we understand that too, because a catalyst in the marketplace at large is got to be something massive. So to me, that something massive would be, oh my God, inflation's now 1%. That's a catalyst, right?
Yeah.
Something like that. We're going to lower interest rates to 2 now, or something crazy. So we're talking about macro kind of event catalyst, right? Not like, oh, guess what? Plantier had a great earnings report. I mean, that's not big enough, right?
Yeah. Trump insulted Biden in a debate.
In the debate, not big enough. We already know what's going to happen. So you need big macro kind of events, CPIs and interest rates, kind of stuff, right?
Right. And that's what this is kind of measuring is, if inflation were to go to 1%, and let's say even the market maybe takes it bullishly or something like that, because they know that we're going to drop interest rates, to 0 really quick. That kind of thing is going to be needed to overcome these resistances. But now let's say inflation goes to 6%, and overnight or whatever. The impact that would have, assuming that it's like the same pressure on both sides, is going to be greater on the bearish side than it would be if people considered it bullish.
Okay.
And that's because of that's what this Vanna Inertia is measuring.
Okay. Do we ever see a positive Vanna Inertia? Do you ever see a positive?
Oh, yeah.
You do.
Hold on. I mean, in all the tech stocks right now, it's pretty negative because, I think JP Morgan is positive right now. Or you know what? No, I know it is.
What is that one? Can't see that.
IWM is
oh, this is the Russell ETF, right? Okay. Let's see what we got. Oh, so that's a different graph.
Yes.
Now, why is this the case? Tell me about this.
All right. So the Russell over the past, I guess, few weeks or whatever has not exactly been performing as well as SPX has, right? And so what, hold on, sorry, while I'm doing this. So what has happened is, but Russell, kind of like SPX, has a lot of customers have bought puts, so the dealers are short puts, and customers have sold calls, so the dealers are long calls.
So it's similar to SPX
So it's similar to SPX, but we have not, because Russell hasn't gone up so much, it is down closer to that put area, right?
To the short put area for dealers.
Right.
Okay. And
so because of that, that's going to be
0.7 Vanna Inertia, which is, on the way to 1.0, the max. So that's a pretty high positive number.
Yeah. That 0.7 is significant. If I were to, so like 0.5 would be like 2 to 1.
Okay.
So
0.7 is significant. And what does this tell us about, direction relative to IWM? What does it kind of indicate that could happen?
So the first thing is that the downside support is very significant. There you see it's very steep, right by where price currently is at 200.
Are dealers long put options there?
No, they're short put options.
Okay. Okay.
So this is short. Vanna is long and short relative to price, not relative to kind. So underneath price, if you are short an option that is positive Vanna, and above price, that same short option would be negative Vanna. So right here are all the long calls that dealers have, and over here are short puts. So it looks like a V.
Okay. So if volatility goes up to that down there, those dealers are getting longer deltas.
Well, they're getting longer Vega.
And they're getting longer deltas too.
Yes.
Because they're short puts. That's a long delta. And that short delta is getting or that negative delta is getting
that's
higher.
gamma and Vanna agreeing, basically, right?
Okay. All right, got it. Interesting. Any ideas on IWM? What do you do here as a potential trade?
Again, this is a implied volatility kind of support right here. So for this particular one, I would be probably doing a butterfly right here at 204. You could probably keep it on for a couple weeks, and you'll see it bounce back and forth. As long as there's no big catalysts, I think that's a winning trade here. Condor, butterfly, just try to do it around the valley, and you're good.
Awesome, I love it. Okay, good. Yeah, this is taking analysis to a new level, right? For folks now. Clearly, I'm going to ask you for your suggestion for people who want to use this. It's not something that you're gonna pick up and understand right away. You're gonna have to work at this a little bit. Is there some seminars or training that you do, or is there some documentation involved that we can look to?
So the Vanna Inertia, we just came out when we came out with this redesign. Now that we have like the widgets, you saw me kind of assemble this widget pretty quickly. This workspace. We are coming out with videos. We came out with one yesterday or 2 days ago. There's 3 more in the hopper. I mean, where there is documentation, there's a user guide. We have a Discord room with people who, when you come in, you ask questions. We have moderators and me answering questions all the time. So, there's a whole community that has realized a lot of like the alpha and the edge that Volin produces. So
that's great. Vol.land.
Yep, that's it.
Right. Jason DiLorenzo at Vol.land.
Yep.
Check it out. It's a great tool. I use it a lot when it works for me. I mean, occasionally it cuts me off because I haven't paid the bills. I don't know what it is, but every once in a while I get
I'll work with you, Lex. I'll get you in.
Get me back in. I do use this a lot. I trade a lot of SPX. I trade a lot of.
And by use it a lot, what he means is he texts me and says, "What strike should I sell?"
I do that sometimes because I'm learning too. My gosh, this is powerful stuff. I didn't have these tools. I did it with moving dates and volatility manually back in the day. That's how we figured this stuff out. We knew it was significant. We didn't know what to call it, and then you smart people got in a room one day and called it Vanna. So I'm like, oh, cool. Wonderful. No, this is great. I appreciate it. So Vol.land, don't forget to hit Jason up on these things. Maybe we can do a little webinar together. Again, if we get enough folks asking a lot of questions, let's do a webinar, and I'll be the question asker and you be the teacher, and we'll get Mark.
All right, I'll do that.
What else can I say? Oh, don't forget to sign up at hub.tradier.com for more of this kind of content and even easier stuff. I know this is a Thursdays are an advanced day, I'd say, right, for the folks. Probably the most advanced during the week. So, don't think all the content at hub.tradier.com is like this. We have all levels. Check it out. Check Jason out at vol.land. And what about the Adeum funds? Can I say that?
Yeah, Adeum funds is our RIA. It's a registered investment advisory.
Okay.
I mean, we're actually launching a redesign of that too. So.
Oh, good. I get another little login. I love it. All right, brother. That was awesome. Next week, I think we'll have Mark back. We'll get on to another topic of interest.
Well, next week are we going to have next week?
No, we're not. Next week is 4th of July. So Nixie rerun day.
Yep.
All right, brother. Have a great 4th if I don't talk to you before then. Thanks for all that. That was very interesting. I really like it. So I'm going to go make an SPX trade now.
Okay.
All right. Good seeing you. Have a great one.
Take it easy, Lex.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.